Adobe stock is down 41% off its highs reached in late 2021, as there's been increasing pressure and concern from stock market investors about how artificial intelligence services will take market share away from Adobe. Those concerns are valid. Now let's take a look at the company's prospects and determine if the stock is a buy now with this lower valuation. So I'm going to look at the company's revenue growth, cash flow, operating income, returns on invested capital, and then look at two different valuation methods, the forward price to earnings ratio and my discounted cash flow valuation for Adobe. Let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Looking at the company's trailing 12-month revenue, you can see a nice increase all the way up to $21.5 billion. That's up from $5 billion in 2015. Adobe's revenue has increased by more than 4x in the last decade. So the company has demonstrated strong revenue growth, but this revenue growth, the continuation of this revenue growth is under question now more than ever, given the rise of artificial intelligence services that could combat what Adobe offers. And then on top of that, you have lower priced services like Canva, which I use a lot in my business. That threatens Adobe's business as well. But Adobe's faced challenges in the past and it's come out ahead. And Adobe can incorporate AI services or AI technology into its services to make it more usable. One of the reasons I don't use Adobe very much personally is because of how challenging it was to understand the software. I found it too difficult for me as a beginner to utilize, whereas Canva was more beginner friendly for me to utilize in my business. So if Adobe can incorporate AI to make it easier for beginners to utilize, that could make its service better than some of the AI-based services in the market. That remains to be seen. Now, looking at its operating profitability, you can see an excellent business. So not only did they demonstrate an increase of more than 4x in revenue in the last decade, but that increase in revenue came with higher profit margins. The operating margin in 2015 was around 10%, and now in 2024, it's over 36%, or I should say now we're in 2025, it's reached 36%. So the operating margin has almost tripled since 2015, while revenue has more than 4x. So in terms of actual business execution, Adobe has done a phenomenal job. And let me share with you additional metrics to demonstrate that point. So the operating margin was excellent, and the cash flow from operations is even better than the operating margin at 37%. There was a slowdown here in this metric from close to 50% down to 32%, and this can explain the primary reason why the stock price is down by as much as it is. If the cash flow from operations to sales had remained this elevated, I don't believe the stock price would have fallen by as much, even with the rising threat from AI. So the company's 37% margin, CFO to sales, is solid. It's still way higher than where it was in 2015 at around 30%, but the improvement is not as potent as is the operating margin improvement. The returns on invested capital measures how good the company is at taking investor capital and turning it into products and services that generate profits. And again, looking back at the last decade, you can see phenomenal improvements from Adobe, where this metric was around 4% in 2015. It's now near 28% in the most recent trailing 12-month period. Adobe has gotten better at taking investor capital, investing it into the company that generates profit for shareholders. Now, given that it has such a successful track record, you can be reasonably confident that Adobe can achieve similar success over the next decade. Maybe not as potent in terms of the increase in return on invested capital, but even if they keep this return on invested capital flat at 28% for the next decade, while the company's revenue grows, that will deliver excellent shareholder returns because the company's cost of capital is so much below its return on invested capital. I'll share with you the company's cost of capital a little bit later when we talk about valuation. So the first metric I want to look at with valuation is the company's forward price to earnings ratio. And at 17.7, it's the lowest it's been going all the way back to early 2022. You can see this chart here. The valuation had been over 30 for moments in time, but it had rarely been at this level at 17.7, maybe briefly in early 2023 and late 2022. It touched these levels, but it quickly bounced up following these low points in valuation. Now, when I did my discounted cash flow valuation model on Adobe, I found its intrinsic value per share at 397 when the current market price is at 405. This valuation suggests a fair value, whereas my forward price to earnings valuation suggests undervaluation. So undervaluation when I use the forward PE multiple and fair valuation when I use my discounted cash flow model. I shared with you that I would talk about the weighted average cost of capital, and I have that calculated at 12% for Adobe. Now remember, the return on invested capital was 28%. When the return on invested capital is above the weighted average cost of capital, the company is creating wealth for shareholders. And Adobe is well ahead. It's more than double, 28 versus the weighted average cost of capital of around 12. So you have significant shareholder wealth being created for it by Adobe if it can maintain this level for the next decade. The question mark is, can it maintain this level over the next decade? Or will the rise of AI services and easier to use services, in other words, competition, will competition eat into the profitability of Adobe, and will the profitability become structurally lower in the future as a result of these changing circumstances? So to answer the question, should you buy Adobe stock at current prices? So yes, my answer is it is a buy while acknowledging the fact that these risks remain elevated. The risks surrounding Adobe stock are higher than arguably than they've ever been in the previous decade. So you are facing higher risks. But I think the lower valuation compensates for those elevated risks you're facing. So in conclusion, I think the risk versus reward is worthwhile for Adobe stock investors at current prices. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.